There are approximately 75 million baby boomers in the U.S., people between the ages of 46 and 64, and one of their biggest fears is outliving their money. Portfolio manager Catherine Avery joins us today with her investment strategies for this demographic. Her work specializes in boomer portfolio management. It's good to have you on the program.
Thank you, Becky.
Yeah, this generation, the boomers, as they look into their retirement, they've got obstacles in front of them that previous generations didn't have, don't they?
Yes, they do. This is a time when baby boomers should really be addressing their financials more closely than ever before. They've worked so hard for this wealth that they need it to last them much longer than our ancestors have in the past.
Yeah, I mean, life expectancy, as you just referred to, is much longer than it used to be before. But then there are so many other variables that you have to plan for. What are some of those variables?
One of them is healthcare costs. The healthcare costs are rising anywhere between 2 to 3 times that of the CPI, which is inflation. And most baby boomers think about when they're saving their money for retirement that it has to get safer. Well, yes, it does have to get safer, but you also have to think about having that money outperform inflation to help keep up with the rising costs.
Are there other issues that you have to think about? I mean, many boomers are concerned, the younger boomers in particular, are concerned about the health of Social Security.
Yes, health and Social Security. The other is, how long are you going to be working? You might have to be working a lot longer than you had to in the past to be able to make up for that shortfall in your money.
That's if you can.
If you can,
That's
exactly.
a good point that you bring up. Many people that say in their 50s say, well, I'm going to be working into my 70s. Well, physically, you may not be able to.
Right. That's why you have to start planning early. Think about it. If you're a baby boomer and you're 46, which is the youngest of the baby boomers, now is the time to start thinking about repositioning your portfolio. Thinking about, are you getting enough income from that portfolio? Are you having things in your portfolio like high quality dividend paying stocks that can provide you with a stream of income, allow you for some compounding of that interest, and also be able to grow over a period of time to outperform inflation?
All right, when you talk about portfolio management for boomers, how do you see that portfolio sliced up?
Something between stocks, bonds, and cash.
Okay, so a diversified portfolio.
Yes, absolutely. So for every baby boomer, it's very different. Everybody has different needs. Everybody has different lifestyles. So now is the time to start going back to your financial advisor and saying, hey, look, I'm thinking about retiring at this point in time. Am I going to have enough money to live in my retirement years with the kind of lifestyle that I want to have? Most baby boomers want to have active lifestyles. They want to travel. They're interested in the arts. They want to be able to fund that in a certain way.
You like value stocks for a baby boomer's portfolio versus growth stocks. Explain why you like the value over the growth.
Well, first of all, in today's market, a lot of these value stocks are attractive valuations compared to the growth stocks.
All right, let's explain what a value stock versus a growth stock is, first of all, yeah.
First of all, growth stocks basically trade at higher, what we call price to earnings ratios. And they definitely have much more of a higher growth. So you're looking for these companies to grow at faster rates than typical.
Which means you as an investor can make more money.
Yes, you can make more money. However, you can also have more reasons for these companies to trip up. And because they have high valuations, if the stock market's going up and you have a correction, they also happen to fall the hardest. So there's not as much downside protection there. With value stocks, and in particular, we happen to like the high quality dividend paying stocks. These stocks, they trade at lower multiples, PE multiples, than the growth stocks. They tend to have higher generations of cash in their portfolios, lower levels of debt, and they provide the dividend. So that dividend helps to control the volatility in the portfolio if the stock market does happen to go down.
You know, but not all dividend-paying stocks and companies are the same. We saw what happened with BP having to cancel their dividend. And some dividends are unreliable. Some companies that pay out a dividend, I mean, the company is just bloated and doesn't really go anywhere. You're not really going to make any money off investing in it. So how do you evaluate which dividend-paying stocks to choose? Which ones are better for your portfolio?
Well, the first thing we do is we advocate at CAIM LLC having several stocks in your portfolio. And by several, I really mean having at least 15 to 30 names that you own so that you're spreading the risk. So that in the event that a BEP incident does occur, it's a very small hit to the portfolio. Secondly, when you're looking at the stocks on an individual basis, you want stocks, again, that have low levels of debt, 55% or under. You want to have companies that generate high levels of cash flow and decent levels of free cash flow, and you want to have dividend payout ratios below 50%. So basically you have a company that if they do come up with an incident where they get into trouble, there's financial flexibility there. And even in the BP case, this company did everything right on the financial engineering side. Let's not forget about the issues with the management.
Right.
But from a financial engineering perspective, they had low levels of debt, and the company produces great cash flow. So there is a way that they can possibly engineer this and survive this over a long period of time.
Very briefly, preparing for tax changes that lie ahead, especially cap gains, taxes on dividends, should you do anything to readjust your portfolio as a boomer in anticipation of that?
Now would be a great time to reposition your portfolio from these high growth stocks into these higher quality dividend paying stocks. You want to take the capital gains on your high growth stocks now and position yourself for the next couple of years. Next year, with the higher taxes, we're possibly running into a situation where the economy is probably going to slow down. Higher taxes are not a stimulus to the economy. And on top of that, you have the possibility of higher interest rates coming.
All right, Catherine, good to have you on the program.
Thank you, Becky.
All right, and that's all for this week. We'll see you next week on 12 on the Money. I'm Rebecca Saran.